In this week's markets update, it's been a good week for global equity investors. US Dow Jones closing above 22,000 for the first time ever, helped by positive tech equity earnings. On top of the positive earnings season, we've seen an easing in financial conditions in the US economy, helped by improving credit spreads, a flattening in the US yield curve, and of course, a weaker US dollar. The level of the US dollar is important for US multinationals and their earnings from foreign manufacturing. And a commonly watched measure of the US dollar, the so-called DXY index, hit 15-month lows this week, and that's down almost 11% from the highs that we saw late December, early January this year. This weakness in the US dollar is one factor that the RBA noted in its monthly policy statement on Tuesday this week. For the last 15 consecutive meetings, the RBA has argued that an appreciating currency could or would complicate the outlook for the Australian economy. This week they argued that an appreciating exchange rate would be expected to result in a slower pickup in economic activity and inflation than currently forecast. In today's Statement of Monetary Policy, the RBA followed through with that commentary and downward revised its growth forecast for year-ended December 17 by 0.5 percentage point and year-ended June 18 by 0.25%. Even with an assumed 80 cent, however, the RBA remains upbeat about the medium to longer term outlook for the Australian economy, upward revising their growth outlook for the year ended June 19 by 0.25 percentage point. And better than expected retail sales for the month of June, after positive outcomes for April and May in Australia, certainly suggests better consumption in the second quarter. We have to remember here that we've got a weak US dollar and strong commodity prices. Steel prices in China have hit fresh 5 and in some cases 7-year highs, and our miners have certainly been more optimistic about the near-term outlook for China as well. On the back of that, iron ore prices have continued strong, trading above $70 for much of this week. With this as a backdrop, it's hard to see a sharp reversal in the Australian dollar anytime soon. After a heavy slew of events here in Australia, which included the RBA policy statement Tuesday, Statement of Monetary Policy Friday, we also had retail sales and softer merchandise trade data. The focus next week turns to survey numbers with NAB business confidence on Tuesday and Westpac consumer sentiment on Wednesday. The RBNZ next Thursday will also be worth watching when it releases its monetary policy statement, remembering this is another central bank that is likely to express its discomfort with ongoing currency strength. The New Zealand dollar up about 9% from the lows seen in May of this year. These are all factors we can talk about in next week's Markets Update.